Hi, folks. Dan Bird here with the daily scan for January 29th. We're getting to the end of the month. We're going to take a look at the January barometer and see how that's doing since we only have one more day left. Actually, two more days left. 31st is on Friday. Today is Fed Day. So I thought I'd use this pretty funny little cartoon from Hedgeye. And Hedgeye is not only produce lots of really cool cartoons, but they are also an investing site. And they do a lot of work on fundamentals of companies and identify trends and even counter trends. So it's an interesting site. If you want to check them out, you can watch some of their videos as well over there. But I thought this cartoon was really funny, just looking at the trend. So this is probably a trend following cartoon. Paul Volcker back in the 70s, Greenspan 5'11", Bernanke 5'8", Yellen 5 feet, and now Powell has broken the trend. So not sure what that means, but it's pretty funny the way the Fed has been going. So that's where they are right now. Anyway, I'm not a financial advisor. Anything I say is for educational purposes only. I am not making recommendations to buy or sell anything. So let's go to the homepage and take a look at the market bias. And basically today, it just sort of went a little bit sideways. Didn't change too much. Now, a lot of this, the Fed meeting was at the end of the day today, and we'll look at what the market did during the day in a minute. But if we look at the market bias chart, it's basically a mixture. Got some greens, got some reds, not much happened, didn't really move too much. The short term went down slightly, but the midterm went up slightly. So not too much change, just still kind of going sideways a little bit. And we'll see how that pans out over the next week or so. S&P, again, just treading water right now. It needs to get above this level right here, 6,100, to resume an uptrend. And I'm not sure that's going to happen, frankly, but we're going to watch 5850. That's the point where it may be starting a new downtrend, or this could be a distribution phase right here. And then a markdown phase would come if it breaks down below 5850. So that's the level we have to watch. I'm also going to look at Bitcoin. And there was a question about Bitcoin, if I could identify the levels. You can see with Bitcoin, it actually had a nice update today after pulling back. However, it still has not broken out above the 106 area. So made it to almost 104 today. And here's the key support at 92. So that's one of the levels, 92,000. Keep that one in mind. So right now it's just going sideways in this range right here. It really needs to break 106 and stay above that level to begin a new uptrend. If it does, then it potentially could go. So this is about 60,000 down here. This would be a flag pattern. So the middle of this is about 100. So that implies about 40,000 or 140 is the potential target if it can break out of this 106 area and stay above that. So then it could potentially go to 140. Now, where could it go on the other side? Let's go back a couple of years and look at it like this. And let's put in some Fibonacci levels. And we'll start up here. Bring it down to the bottom back here. And what you'll see is that the major support is right here at about 73,000. So right in that area right there, 72.5 roughly, which just interestingly just so happens to coincide with the highs back here in the beginning of 2024. So that's the level it potentially could go to if it breaks below 92.5. 72.5 would be the next potential target. That's below the 200-day moving average. And then if it continues past that, then 62.5 would be the next one. But that's where I think it could go if it breaks below this 92.5. And if that happens, and I showed on a previous video how Bitcoin is highly correlated now to the NASDAQ 100. So if the whole market falls apart and starts to go down, then Bitcoin most likely will go with it, and will go into one of its bearish phases. Right here, it went from basically 73. That's essentially 73,000 right there. Went all the way down here to about 55,000 during this phase, and then finally broke out. So that's the downside. The upside is about 140, based on the chart and based on what we're looking at. So we'll see if that happens. All right. One thing that I want to cover that I forgot to do yesterday, and so I want to do it today. And right at the end of talking about candles yesterday, what I wanted to also show is how to build a scan using stock charts and using candles. So if I go to stock charts and I click on this button here called scans, go down here and I'm going to create a new scan. And it brings this little scan engine up. And you can see it's looking for a stock and looking for volume above 40,000. I usually change that to at least 100,000 in volume. And then what I want to do, first off, is I'm going to look at the S&P 500. So I can come down here and add some things to my scan. So under indexes, I'll click on that and I will choose the S&P 500 right there. Add that one. So now that's part of the scan. And then I will also choose candlestick patterns. So there's a few of them that I'm going to take a look at. I talked about the, let's look at bullish engulfing. We'll add that one. Let's also look at the hammer. Talked about that yesterday. I'll add that one. Let's also look at shooting star. We talked about that. And what else looks interesting in here? Let's see. Bullish engulfing. That might be enough just to show you how to do this. Gravestone Doji, but most of these are the ones that I talked about yesterday. Yeah, that'll do it. All right, so those are the ones that I've got right now, but I don't want it to try to find all these at once. So I'm going to remove two of them, or just blank them out essentially. And the way you do that is just to put slashes next to it. So now I'm only going to be looking at bullish engulfing candles for the S&P 500. So let's see what we get. If I run the scan, only one. Interesting. So let's look at this one. Bullish engulfing candle. Remember I said it covers the previous day. So that one right there, that's what it's doing. It's covering the previous day's candle. So that's the bullish engulfing. Now if I go back here and instead of that one, I'm going to try the hammer. So I'll take the slashes off of that one. Run that scan. Nothing today. I had lots of them yesterday. Let me put that back and try a shooting star. This is a bearish reversal. And now we've got a number of those. So you can see ADP. These are all the ones with bearish reversals on the S&P 500. So let's take a look at ADP, see what it looks like. There it is right there. There's the shooting star candle. And in fact, I'm going to move all of these. This is one technique you can use when you get a number of different stocks. You want to look at them all. Click on Save to Chart List, and I'm going to replace a list. And there's a list that I have defined that always ends up at the top of my list just because of the way that I named it. And it's called Scan Dump. It's basically just an area to dump all of the results of that scan into. So now all of those are in this one chart list, and now I can do whatever I want with it. I can look at it in different views, but in this case, I'm going to look at it as a chart book, so I can look at all of them. I can just click through them all. So there's ADP. So keep an eye over here for the shooting star candle. There's AIG. right there. That's not, I wouldn't exactly call that a shooting star because I would like to see it at the top of a run. And this run might have already begun, but it's still the same thing applies. It's a visual representation of market psychology. So the market tried to push it higher during the day, but pushed it all the way down by the close. There's DVA. That one definitely is a shooting star. There's Fiserv, clearly a shooting star. It's actually almost a tombstone doji. So that one probably will reverse. KKR, that's definitely a shooting star. You can see right there, it's right at the very top of the run. So it probably is going to head lower. There's Morgan Stanley. That's definitely a shooting star right there. Here's Regions Financial. I wouldn't call that a shooting star necessarily, although the concept still applies, but it's not really at the top of a run. Like this one over here for sure is. And this gives you a good example of what happens after a shooting star when you find it at the top of a bullish run like that. So that was the beginning of the downtrend. And that's pretty reliable usually. Here's Truist, same thing over here, same time frame. They're both in the regional banks. So it had a shooting star back here, and there's the downtrend. It had one right here after going sideways. Actually, it had one even previous to that. So there's two shooting stars on that one. So that's the way you create a scan using this. If we go back and let's see, do the hammer, because we didn't get any today, but I'm going to start one trading day earlier than today and see what we get. Okay, now we've got a number of them because that was yesterday. So I'm going to replace my scan dump again. And this time I'm going to step through them again with the chart book. And now we should see, so we'll be looking at yesterday's candle in this case rather than today. There's, interestingly, it's a shooting star type of candle, but it's not at the top of a run. But it still could imply that this whole piece right here, and this might apply to a lot of the AI stocks, was just a temporary dead cat bounce. We'll see. So there's Arista Networks. So we're looking at the day before in this case. So day before, you get two hammers in a row on Digital Realty. Here's Eaton. Yesterday was a hammer, clearly a hammer, so it started to move up today. GEV, this had been on a really good run and had a hammer yesterday. You can see right there. Hang on one second. Saw a mosquito flying in my office. So that's yesterday's candle. Jabil right there. There's the hammer. Keysight had a hammer yesterday. Williams, there's the hammer. So that's the way you create a scan. As easy as that, and it's pretty easy in stock charts just to use this little scan builder down here. You can use your own chart list if you want. A lot of times I will use my top 10 list as one of my chart lists when I create scans like this. This one right here. So I can add that one into the mix, and I can remove S&P 500. Just interestingly, so it's still still executing the same scan from yesterday, and I've got even more hammers by doing it that way. So that was interesting. So that's the way you create a scan using the candles. Let me know if you have any questions on that. Hopefully that was helpful. One thing I want to point out, something I wanted to mention was I have the national debt clock right up here. And I will try to update these numbers right up here. Right now, we have a debt to GDP ratio of 133%. But something was just added to the national debt clock, which is the Doge clock. So this is, you see up in the upper right, Department of Government Efficiency. This shows you the savings so far that it has accomplished. $34 billion so far in savings from Doge. So I thought that was an interesting addition, and you can always get to that. You don't need a subscription. Anybody can get to my site, breakpointtrading.net. It's also where you can find the YouTube channel. And you can just click on the debt clock and take a look at the things that are in there. That's pretty interesting. All right, earnings. Let's talk about earnings. Today, there were a number of really important ones. I actually wanted to wait a little bit because some of the conference calls are going on right now, some of these. So what I'm going to do first, again, without needing a subscription, you can come to breakpointtrading.net and click on this little button here called Current Earnings Calendar. And we are going to look for earnings for, we can do large cap stocks. Let's do NASDAQ 100 stocks. And you see it's already sorted for today's stocks. So you can see Meta, Microsoft, and Tesla all reported today. Apple reporting tomorrow. And let's look at a couple of these. So Meta actually beat, Microsoft missed, Tesla missed. Interestingly, Tesla missed, but I think they actually are, and after hours are up. So to the left of this right here, I'm going to click on that button, and then we're going to look at symbol summary. And it will show us what's happening after hours. So you can see with Meta, it's up 2.8%, almost $20 after hours. So Meta had good earnings report today. Now, if we look at Tesla and do the same thing, symbol summary. Tesla, on the other hand, actually Tesla's up. That's right. Tesla missed, interestingly, Tesla missed earnings and revenue, but yet they are up 4% after hours, up $17, over $400 again. So even though they missed, they're still up after hours. And then we'll look at Microsoft, and they missed also today, and Microsoft is down 2%, down almost $10. So quite a mixture today of stocks. Another one that reported today was IBM. IBM actually had a good earnings report, and they're up almost 10%, 9% after hours right now. So IBM looks like one of the winners going into tomorrow. So it was a mixed bag. We'll see what happens tomorrow and what effect that has, how the market reacts to both of these things, reacts to the Fed meeting and also reacts to earnings. So we'll see how it goes. Let me, next, I also want to show, that's Bitcoin. That one. I'm going to go back to the dashboard and take a look at how the market has done. So you can see equities right at 2 o'clock, the market tanked. And right after Powell started speaking, it went back up again. So initially it looked somewhat hawkish, the report. But then as he started speaking, there wasn't really anything new. I mean, it's everything that we should have really expected. So the VIX basically treading water. All the indexes were down, but not significantly. Bonds, the US dollar was up slightly. 20-year was down a little bit. 10-year up a little bit. And then crypto, which I just looked at, Bitcoin up 2.25% for Bitcoin. Interestingly, take a look over here. So these are the stocks, mid-cap stocks that had the biggest change today. And one of the top is NXT. I had talked about this before. And here's the chart. So they actually reported today, yesterday after the close, 28th, and they had a great report. So they took off today, pulled back, a lot of profit taking, but they probably are going, I would expect this to go sideways for a little bit before it moves higher again. But they had a great report, and they're right at the top of the list in the dashboard today, NXT. And as you would expect, down here for the highest industry groups, renewable energy, which is where NXT is located. And since that is in the highest industry group, one way that you can look at those is you can go to the sector summary, and that one is in technology. And you can see renewable energy right there. And this will bring up all the stocks. And you can see the one at the very top is NXT, right at the top of the list. And you can see the other ones in that list as well. They aren't doing as well. For solar down here, Almost all of them look awful, frankly. So NXT is the one outlier that's really starting to take off and might make it back up to its highs at $60. So right now it's at about $50. That'd be about a 20% gain. Not bad. All right, so that's it for earnings. We can look at earnings in another way using um, the ACP platform, and I'll look at it like this. So we'll take a look at the same ones, and you can also see the posts. You can see what happened after hours. So there's Tesla after hours. Here's Microsoft after hours down 4%. Meta after hours up 2%. So you can see that this is the daily chart on the left and the weekly chart on the right. IBM, I mentioned right there. Now you can see IBM has been in a squeeze for quite a while. So this squeeze definitely is firing to the bullish side today. And you probably could have anticipated this, but just by looking at the chart now, it's starting to curve up. Where the 5-day cross to 21, that's the short-term up signal. It's above the zero line. It's in a squeeze. So earnings today was very positive. You can see right now it's up 8% after hours. NXT that I just mentioned right there, clearly doing well. Another one is ServiceNow that I think missed today. ServiceNow, oh yeah, down $94 on ServiceNow. So 1048, that's going to be down, way down here. It's going to open way down here. It probably will go down to the lows. Might go down to 1,000. So those that think that ServiceNow is still a good company, if it makes it down to 1,000, that might be some place to jump in. We'll see, but looks like they missed today. So not a good day for them. But that's one way you can look at those stocks as well, with the daily and the weekly side by side. All right, one last thing that I want to talk about, and I'm going to probably dedicate a Technical Tuesday to this, but there's something that I'm putting together on for subscribers now on the charts page. And I learned this from Dave Keller on his live channel today. And I kind of knew this because I've seen Dave and I've talked to Dave before and seen him kind of explain all of this, but I thought it would be a good opportunity to actually put it on the website and have a way to do this for subscribers. And it's basically the daily routine. So just the things that he does and the things that I usually do, just to see what the market is doing ahead of time. I like to do it after the close the day before, so that I'm kind of prepared for what might happen, and unless something unique happens before the open, but it kind of prepares me for the next day. So the daily routine essentially goes through these steps right here. So first is I'm just going to look at the S&P, but you can also look at the NASDAQ on both the weekly and a daily basis. But I'm going to start with the weekly analysis. So this shows you right here the long-term and the medium-term trend. You can see the long-term trend, and this is good for long-term traders or investors. So this is one way that you can use this to get into something and stay in it for quite a long time. So right now, this was where this crossed over the zero line right down here. It's basically a 21 and a 34 MACD or PPO. I taught on this in a previous Technical Tuesday. For those that missed that, you can just go back and take a look at it, what the PPO is and how to use it. So this is the long-term trend right here. So that would have been the time to get in, and you would still be in. It has not crossed back below. The medium term is more for shorter term signals to maybe get out before a long downtrend, but you don't really know if that's going to happen. So that happened right here. You can see right here. So in this case, for those that are more traders and don't want to don't want to stay in a longer term downtrend, that would have been the point maybe to get out, and then you would get back in when it went back above zero. So you would have been out for a couple of weeks, about 2 months probably, right through this period. This is a weekly chart, so each one of those bars represents a full week. So you would have been out there 2, 3, 4, 5, 6, 7, 8. Back in about 2 months later. So that's one way to use that. You can see what the overall market is doing right now. We're still pretty far away from getting a long-term downtrend. It's getting a little bit closer on the medium term, something to keep an eye on. But we're still probably a couple of weeks away from that happening as well, unless something really dramatic pushes it down. So that's step one. Next is the big picture. And on the big picture, I've got a daily and a weekly. And this is nothing more than just a step back and a long-term view. There's no indicators or anything on it. It's just the price action. This is a daily chart right here. And I put some trend lines in so you can see what it looks like. If you remember from my, my pattern recognition Technical Tuesday a couple of weeks ago, I talk about the bearish wedge, and that looks like it's forming a very long-term bearish wedge. So it could keep going for a while. But right now it's been going up and down in a sideways movement, which looks like a distribution phase. You can see down here there was a distribution phase before 2022. It was a long, almost a whole year bear market. So we might be doing that again. And the only way that this will be broken is if we can decisively break through the upper end, which is 6,100. But that's a daily view. If you want to look at it on a weekly view, to get a longer view of it, that's what it looks like. And you can still see the potential sideways movement up here, or distribution phase. Again, it needs to break above 6,100, but 5,850 is the low. So it's still staying within that area. And this goes all the way back. You can see where the 21 and the 50 cross, and it turns red right there. That's the long bear market. So right now, we look okay, but there probably makes sense to have a little bit of caution. Then you could look at the Keltner channels to see how far we are from the extreme. Right now, it went all the way up to the 3x area. And I also taught on Keltner channels on a Technical Tuesday, so you can go back and learn what these things are. Came back to the mean right here, and now it's sitting just above it. So far, it still looks bullish, somewhat bullish. But if it breaks through this 21-day right here at about 6,000, then, and the bottom of the 1x channel is at about 59.27, and interestingly, the 2x is at 58.50. So 58.50 again is really the most important area. Next is the 10-minute chart, just to see what it's been doing the last 5 days. And you can see the market right here, right at 2 o'clock. It was drifting down all day, and then it went down significantly right at 2 o'clock. And then as soon as Powell started speaking, it bounced back up again and then went sideways. So we don't know yet what's going to happen tomorrow, and probably it's going to be dependent on a lot of the earnings that are coming in. So right now the earnings seem to be mixed. So we'll see what the reaction of the market is when it opens tomorrow. So that's the 10-minute chart, just to see what it's been doing over the last 7 days. And then next we go to some of the other things. I'm not going to go through all of these. You can certainly go through them yourself. But cap weighted versus equal weighted is an interesting one. So especially the equal weighted. So here's equal weighted. This is for the S&P and the NASDAQ. And you can see even as the market has been making new highs, those have been hitting new lows. I mean, not new lows, but trending down, I should say. So the equal weighted, that the cap weighted, here's the weightings over here of all the large cap stocks. And you can see the cap weighted has been moving slightly higher, but when you equalize everything and make all of them the same weighting, it's actually going down. So that shows some weakness in the market right now. Not significantly, and it hasn't broken through this support line down here, but something to keep an eye on, just something to look at every day just to see what the overall market is doing. Growth versus value, so you can see what the growth versus value trends look like. And lately, even though they had been going up significantly in December, since the beginning of the year, they've been trending down. So that's large cap right there, mid cap, and small cap down below. So you can look at each one of these. There's a breadth analysis, intermarket breadth analysis, shows you that same thing. So there's the NASDAQ versus the S&P, heading down, growth versus value, consumer discretionary, mid cap, had been rallying, but now moving lower, and then small caps as well. So that's kind of the way that I look at the market. I like to touch on each one of these each day just to see what things look like. There's the VIX, see what the VIX is doing. You can look at the McClellan oscillator, which is the advanced decline lines, and you can see that it is bullish right now, starting to roll over, but it's been bullish. So that actually, another thing to keep an eye on. So there's the sideways movement that potentially a distribution phase. So we'll have to keep an eye on that as well. But all of these things is just a way to very quickly, I mean, you can see how quickly I'm looking at these. You can look at them in just a few seconds just to see what the market is doing, and gives you a sense for how you should be positioned or what you should be expecting for the next day. And then when the next day comes, you can see what happens before the open and how the market is looking. All right, so that's it for today. Hopefully that was helpful and interesting and educational. Let me know if you have any questions or if you would like me to look at any particular stocks. I'd be happy to do that. And that's it for today. So we'll see how things open tomorrow. Apple reports tomorrow night. So we'll see how Apple does and how the market reacts to everything that happened today. Thanks everyone for watching, and good luck trading.